In 2025, the world is facing an ever-changing economic landscape, with inflationary pressures still lingering, rising interest rates, and global uncertainties continuing to affect markets. Many people are left asking the same question: is property still worth it? For decades, real estate has been a cornerstone of wealth creation and a symbol of financial stability. However, in today's climate, the rules of the game have changed. So what does the future of real estate hold in this post-pandemic, inflation-stricken world? To answer this question, we must first consider the forces that drive the real estate market, chief among them, inflation. Inflation at its core is the rising cost of goods and services over time. As inflation increases, so too do the costs of living, including housing. Property values tend to rise as inflation increases, but at the same time, inflation erodes the purchasing power of money, making it more difficult for individuals to afford real estate. For many years, real estate was seen as a safe hedge against inflation. As the value of currency decreased, property prices generally increased, allowing investors to preserve or even grow their wealth. But as we enter 2025, we're seeing a new set of dynamics. The inflation we are currently experiencing is not just a result of the typical economic cycles. It is driven by a unique combination of factors, including supply chain disruptions, energy crises, geopolitical tensions, and government fiscal policies. These factors have created an environment where inflation is not simply a short-term blip, but a long-term challenge that could continue to affect property values. Real estate investors have long relied on the concept of the safe haven property, those assets that, over time, consistently appreciate in value. Historically, real estate has shown resilience, whether through periods of inflation or economic downturns. The theory goes that if the value of the currency drops, people will turn to tangible assets like land or buildings, which cannot be inflated away in the same way that money can. This reasoning still holds true to an extent in 2025. But we have to recognize that the landscape has changed. Inflation has hit all sectors of the economy, from food and gas prices to construction materials and labor costs. As a result, the cost of building new properties has skyrocketed, which has led to both a rise in property prices and a slowdown in the construction of new housing stock. In many parts of the world, especially in urban centers, the demand for real estate continues to outpace supply, driving up prices. However, this is not true across the board. In certain regions, particularly in more rural or less densely populated areas, the demand for real estate has been weaker, as remote work and lifestyle changes driven by the pandemic have altered people's preferences. Additionally, the rising cost of homeownership, which includes higher mortgage rates, taxes, and utilities, has made it more difficult for first-time buyers to enter the market. For many people, the dream of homeownership seems increasingly out of reach. Instead, they are opting to rent, and that too is driving up rental prices in some areas. With inflation continuing to push prices higher, some are beginning to question whether real estate is still the reliable investment it once was. The rise in mortgage rates is one such factor that has tempered the enthusiasm for property investment. In 2025, we are seeing higher mortgage rates than in the past decade, which means that borrowing to purchase property is more expensive. This not only reduces the potential for leverage, but also means that investors may not see the same returns on their investments that they did in the past. This has led to a cooling effect in certain markets, particularly in luxury properties, where buyers are more sensitive to rising borrowing costs. However, despite these challenges, real estate can still provide attractive returns, but it requires a more strategic approach. One of the most important considerations for property investors in 2025 is location. In many cases, investors are shifting focus away from the high-cost, high-competition urban markets and looking toward emerging markets or more affordable regions. Suburban areas, smaller cities, and even international markets are seeing increased interest from investors seeking value and lower entry costs. While the luxury markets in major cities may experience stagnation, the middle-class housing market, especially in rapidly growing regions, remains strong. Another important consideration is the type of property being invested in. Residential properties, especially single-family homes, continue to be in high demand in many markets, despite the challenges posed by inflation and rising interest rates. Rental properties, too, offer a way to hedge against inflation, as rental rates often rise in tandem with the cost of living. In fact, rental properties can be a particularly effective strategy for investors seeking consistent cash flow, as tenants typically absorb the increased costs through higher rent. Moreover, real estate investment trusts' REITs have become an increasingly popular option for those who want to benefit from real estate exposure without the complexities of direct ownership. REITs allow investors to diversify their portfolios, gain access to commercial real estate, and take advantage of the real estate market's growth potential while minimizing individual risk. In addition to the demand for traditional housing, commercial real estate also offers a unique opportunity in 2025. The office space market, which was severely impacted by the rise of remote work, has begun to stabilize. Many companies have adapted to hybrid working models and are now seeking flexible office spaces to accommodate their employees' evolving needs. The demand for logistics and industrial spaces driven by the growth of e-commerce has also remained strong. These commercial sectors, while facing challenges, are proving to be resilient in the face of inflation and changing work dynamics. The long-term trend of urbanization, which has driven the demand for real estate in large cities for centuries, is beginning to shift. As a result of the pandemic, there has been a notable increase in the desire for more space, particularly in suburban and rural areas. This is leading to increased demand for larger homes and properties with outdoor spaces. At the same time, cities are evolving in response to these changing preferences, with many urban areas now focusing on creating more walkable, sustainable neighborhoods that blend residential, commercial, and recreational spaces. This shift is creating new investment opportunities in smart cities, which focus on integrating technology, sustainability, and livability. Moreover, the trend toward environmental sustainability and climate resilience is influencing real estate development and investment strategies. Properties that are energy efficient, use sustainable materials, and are resilient to climate change are increasingly in demand. Government incentives, such as tax credits for green buildings, are also encouraging developers and investors to pursue environmentally friendly projects. Over time, this could increase the value of eco-conscious real estate, offering an additional layer of security for investors. While inflation presents a challenge, it also presents an opportunity for those who can think strategically and adapt to the changing landscape. Real estate is still a long-term game. Those who are able to take advantage of market fluctuations, look for emerging opportunities, and invest in high-demand areas or property types are likely to see their investments pay off. However, it is also essential to be realistic about the risks. Short-term volatility, rising interest rates, and the potential for continued inflation mean that property may not offer the same level of security it once did. The answer to the question of whether property is still worth it in 2025 is not a simple yes or no. Real estate can still be a sound investment, but it requires a more nuanced approach than it did in previous decades. Investors must be vigilant about the economic conditions, understand the dynamics of inflation, and adjust their strategies accordingly. While some markets may experience slower growth or stagnation, others will thrive. As always, it is the savvy investor who can identify and capitalize on the shifting trends who will ultimately succeed. To those asking whether it's still worth it to invest in real estate in 2025, the answer lies in understanding the complexities of today's market, diversifying investments, and focusing on long-term trends. Real estate remains a powerful asset, but like any investment, it requires careful planning, knowledge, and adaptability to succeed. If you approach real estate with the right mindset and strategy, you can still make it a key part of your financial future. Inflation in 2025 remains a critical force driving both the real estate market and the broader economy. While it's true that property values typically increase in line with inflation, the current environment is more complex than previous cycles. As inflation continues to rise, the costs of materials, labor, and land development have also surged. Construction costs have escalated significantly, making it more expensive to build new homes and commercial properties. This puts additional upward pressure on property prices as developers pass these costs on to buyers. At the same time, rising inflation is driving up mortgage rates. Central banks, in an effort to control inflation, have implemented higher interest rates. While this may help reduce inflationary pressure in the long run, the immediate effect is that borrowing money to purchase property has become more expensive. For potential homeowners, particularly first-time buyers, this increase in mortgage rates presents a major hurdle. Monthly payments are higher, and the purchasing power of many buyers has been diminished, limiting their ability to secure the property they want or can afford. This shift is having a noticeable impact on affordability across both residential and commercial real estate markets. For investors, however, it presents a more complex picture. While property values may continue to rise, the costs associated with acquiring and financing property have increased. Investors need to be much more strategic in their approach. Identifying markets where demand outpaces supply will be crucial, as these regions may still offer strong returns despite the rising costs. Areas with limited inventory, whether due to zoning laws, geographic limitations, or other factors, may present more attractive opportunities, even in an inflationary environment. In 2025, we're witnessing a significant shift in real estate demand, with many people choosing to leave high-cost urban centers in favor of more affordable suburban or even rural areas. This migration is largely driven by the continued normalization of remote work, a trend accelerated by the pandemic, which allows individuals to work from virtually anywhere. With fewer people needing to commute to city offices every day, the attraction of living in sprawling urban centers has diminished for many. Instead, buyers are opting for larger homes with more space, particularly properties that offer home offices, outdoor areas, and a higher quality of life at a lower cost. As a result, real estate markets in suburban and rural regions are experiencing a surge in demand. These areas are becoming increasingly desirable because they offer more space for families and tend to have lower property prices, making homeownership more achievable for people priced out of cities. These shifting preferences are reshaping the demand for both residential and rental properties, with a growing number of buyers and renters seeking out smaller towns or suburban neighborhoods that offer a better work-life balance. At the same time, this shift poses challenges for traditional real estate hotspots. Major cities like New York, London, or San Francisco, where demand has historically been strong, with fewer people flocking to these urban centers, property values may face stagnation or slower growth, particularly in the luxury and office sectors. However, this doesn't mean these cities are doomed. In fact, they are adapting. Many urban areas are reimagining themselves through mixed-use developments that combine residential, commercial, and recreational spaces, creating more sustainable, walkable neighborhoods. Investors need to stay alert to emerging markets that combine affordability with future growth potential, while still recognizing the ongoing evolution of cities that are increasingly focused on sustainability and livability. Despite the challenges posed by inflation, market volatility, and rising interest rates, real estate continues to be one of the most reliable long-term investment vehicles. While short-term fluctuations in prices and rising construction costs might cause concern for some investors, history has shown that real estate tends to recover over time, and its value appreciates steadily in the long run. The key for investors in 2025 is to approach real estate with a strategic mindset, focusing on opportunities that align with shifting economic and societal trends. One area of opportunity lies in the residential property sector, especially in high-demand rental markets. As homeownership becomes increasingly difficult for many due to rising mortgage rates and inflationary pressures, the demand for rental properties continues to grow. Investors who focus on multifamily units, single-family rental properties, or even vacation rentals in sought-after locations can continue to generate steady cash flow, which becomes particularly attractive when interest rates are higher. Moreover, with rents often rising alongside inflation, rental properties can offer a hedge against the erosion of purchasing power, making them an appealing option for those seeking income-generating assets. The commercial real estate market, although facing challenges like the shift to remote work, still holds potential in sectors such as logistics, warehousing, and last-mile delivery spaces. The growth of e-commerce has created an increased need for distribution centers, and industrial real estate in particular is seeing consistent demand. Additionally, niche markets such as sustainable and eco-friendly buildings are increasingly gaining traction. Properties that are energy efficient or designed with environmentally friendly materials are not only more attractive to buyers, but also offer the potential for higher resale value and tax incentives. For investors to truly thrive in the 2025 market, diversification remains critical. Spreading investments across various property types, markets, and even geographical locations can help mitigate risk and take advantage of different growth opportunities. A portfolio that combines residential, commercial, and green real estate investments gives investors exposure to the evolving landscape of real estate. Furthermore, a deep understanding of emerging trends, such as the increased focus on sustainability and the rise of mixed-use developments, will allow investors to anticipate where demand is likely to shift and make informed decisions. In conclusion, while the real estate market in 2025 presents a more complex and competitive environment, the potential for significant returns remains. Success will hinge on an investor's ability to adapt to new market realities, diversify their investments, and strategically focus on high demand, high growth sectors. With careful planning and a long-term perspective, real estate can still offer a reliable path to wealth generation, even amidst the volatility of today's economy.